Good morning, all. Today we are discussing the account formats of single entry system. The first one is format of statement of affairs. It is similar to that of balance sheet, but uh, its assets. It has similar to that of balance sheet. It has both assets and liability side. In the asset side, you have to write all the assets, both fixed and current assets should be included in the asset side, like land and building, plant and machinery, furniture, investments, stock, sundry debtors, bills receivable, cash at bank, and cash in hand in asset side. While in liability side, we write sundry creditors, bills payable, bank overdraft, loans, outstanding expenses. Here we find the balancing figure, it is the capital. The next one is total debtors account. It is also known as sundry debtors account or debtors account. We are starting the debtors account with its opening balance to balance brought down, and the items to be credited in the debtors account are by cash, that is cash collected from debtors, by bills receivable, the balance of bills receivable account. If there is any sales returns or return inwards, you have to be debited. Then bad debt, discount allowed. These are the items to be credited in the total debtors account. And the closing balance of debtors account to be written as by balance carried out. And here we are preparing this account for finding the balancing figure, that is credit sales, the balancing figure of total debtors in single entry system, that may be credit sales. Next account is bills receivable account. It's also an asset. So it has debit balance. We are starting with the to balance brought down. Then if there is any bills on it, we are credited with the by cash. If there is any bills receivable endorsed or disowned, we have to be credited. Then discount, if there is any bills receivable discounted, that have to be credited. And the closing balance of bills is by balance carried out. Then to sundry debtors, that is the balancing figure of this bills receivable account, and this is transferred to sundry debtors account. The next account is to be prepared in single entry system is total creditors account. It is a liability, so we are starting with the by balance brought down. Then to cash, that is cash paid to creditors. Then to bills payable, the balance of bills payable account. If there is any purchase return, that should be debited. Discount received to be debited, and the closing balance is to be to balance carried out. If there is any cash collected from debtors, it is to be paid as by cash. And the balancing figure of this account is by credit purchases. Next account is bills payable account. So by balance brought down, bills payable is also a liability. So we are starting with the by balance brought down. And if there is any bills payable, paid on it or paid to cash, then if there is any bills payable dishonored, that should be transferred to sundry creditors account, and the closing balance of bills payable is to balance carried out. And the balancing figure of the bills payable account is transferred to creditors account by sundry creditors account. Next major account to be prepared in single entry system is cash book. In the debit side, we are recording all the receipts, and in the credit side, we are recording all the payments. So we are starting this cash book with the two balances. If there is any cash in hand, that should be recorded, and also the balance of bank account should also be recorded here. So to balance brought down, cash accounts balance and bank accounts balance together you have to write. Then if there is any collection from debtors, you have to record it in the debit side of the cash book. Cash sales, bills receivable collected, additional capital introduced by the proprietor. If there is any commission received to sundry income, if there is any income received by the proprietor, that should all these items to be debited in cash book. And on the payment side or in the credit side, you have to record all the payments by sundry creditors. That means the amount paid to sundry creditors, by cash purchases, by bills payable, uh, then by drawings if there is cash with any cash withdrawn by the proprietor, then by salaries, by rent, by sundry expenses, and the closing balance of cash. The next account to be prepared is memorandum trading account. This memorandum trading account, similar to that of trading account, all the items are to be included. What are the items to be included in trading account? That should be included in memorandum trading account. The items are to opening stock, to purchases less returns, then to wages, to freight, to manufacturing expenses. And on the credit side, you have to write by sales less returns, then by closing stock. The balancing here is to gross profit. This is the case of trading account. But in memorandum trading account, we are preparing this account for, we know all the figures except one. That means we know sometimes it may be a missing figure, that may be opening stock, or that may be purchase, or that may be sales, or that may be closing stock. So in order to find the missing figure, if it is opening stock, all the other informations are available. That means purchases, wages, freight, manufacturing expenses, gross profit, sales, and closing stock. All these informations are available. So at that time, you have to prepare this memorandum trading account for finding the value of opening stock. If the missing figure is purchases, all the other information except purchases are given in the problem. So in the problem, you have to write opening stock, wages, freight, manufacturing expense, gross profit, sales, closing stock. So after that, you have to find the missing figure as purchases. If the figure missing is sales, all the other informations are available. That means except sales, all the other informations are available. That is opening stock, purchases, wages, freight, manufacturing expense, gross profit, and closing stock is available. So at that time, we are preparing this memorandum trading account for finding the value of sales. Sometimes it may be closing stock. At that time, all the other informations are available. So at that time, you have to debit all the opening stock, debit all the items like opening stock, purchases, wages, freight, manufacturing expenses, and gross profit, and credit sales. At that time, the balancing figure is closing stock. And there is another term. Sometimes the gross profit is given as a percentage of sales or as a percentage of cost of goods sold. So at that time, you have to find the value of gross profit. If the sales is given, you can directly apply the percentage to find the value of gross profit. If it is not given, uh, if the percentage is gross profit is based on cost, at that time you have to apply. If the sales is 20, if the gross profit is 20% on cost, that is 1/5 on cost. At that time, the gross profit is 1/6 on sales. If the gross profit is 25% on cost, at that time, gross profit is 20% on sales. Okay, thank you.